Ladies and gentlemen,
Good evening.
Are you ready?
Okay, here we go.
You're listening to the Deal Room Podcast. Join us as we bring you the inside scoop on business sales and acquisitions. Get across trends in the area and hear the industry's best recount their real-life tips, traps, and experiences. Now, here's your host, Joanna Oakey.
Hi, this is Joanna Oakey here, and welcome back to the Deal Room Podcast, a podcast proudly brought to you by our commercial legal practice, Aspect Legal. Now, today we have part 2 of our 2-part series with Phillip Teudt from Business Buying Services. Now, in part 1, if you missed it, don't hesitate to go back and catch up, because we talked all about what it means to have a buyer's agent, why businesses might use someone to advocate on their behalf as a buyer, the kinds of businesses and individuals are that might be clients of a buyer's agent, and what they're looking for in a business that they're looking to purchase. We also specifically looked at business purchasers who are high net worth individuals, often coming from corporate, and we really worked through what they're looking for in a business and what makes a successful transaction. But today we're moving on to part 2, where we are looking in detail at SMEs and mid-market businesses who are acquiring businesses as part of their growth strategy. We also dig into corporates using acquisitions as part of an aggregation model, and we look at where some trends are and where the hotspots are in this area at the moment. So buckle in. Here we go.
ladies and gentlemen,
Good evening.
Are you ready?
Okay, here we go.
You're listening to the Deal Room Podcast. Join us as we bring you the inside scoop on business sales and acquisitions. Get across trends in the area and hear the industry's best recount their real-life tips, traps, and experiences. Now, here's your host, Joanna Oakey.
So obviously one buyer you've just talked about here is looking for a good deal, looking for something in the market they think they can pick up at a bargain and then run a bit of a turnaround on it. So just taking that particular buy and that particular example, have you seen any, I'm really interested in examples of where you've seen this done really well and then where it has really backfired?
Yeah, as I said, it's not for the faint-hearted doing this stuff. And so the clients that are in that phase are acutely aware that there is a lot of risk involved in doing it, but the value of the assets probably are reflected in the risk, and so they're prepared to take it. So, we've been involved in some engineering companies where businesses have actually grown too quickly and have run out of cash and find themselves on the ropes. And so our clients have been able to add value simply by bringing cash to the table. So there's lots of different opportunities around distressed assets. They don't all go to plan in this area, and that's just the reality of it. And the clients, our clients in this space are very sophisticated. They're mid-sized companies with revenues probably of $20 or $30 million. And so they've got the appetite for the risk, but not suggesting everybody should do this.
So warning out here, don't try this at home without assistance.
Exactly.
Okay, let's talk about maybe your other markets of SME or mid-market that are looking for, we've talked about the distress side, but for acquisition as a growth strategy. What do these businesses look like when they're coming to you? So who are they and what are they looking for?
So Australia is a small market. Organic growth is tough. And a lot of businesses get to a certain scale of that, 20 to 30 million, and organic growth is, expensive as well as tough. And so a lot of our clients in this space develop a strategy around growth through acquisition. Now that could be vertically, horizontally. We had one client recently who were in the clothing manufacturing space. And so we vertically integrated and took them through to a retail space. So we acquired 20 or 30 stores, and so they were then able to manufacture and essentially wholesale as well, but vertically integrate into the retail space. So that made sense to them. So, yeah.
And what impact did that have on their business? Do they ever provide you with sort of a synopsis a few years out from the transaction of what the success has been of the acquisition?
Yeah. So by and large, very successful. We've had clients who have actually made in this mid-market space anyway, who've made acquisitions. Let's say we've made an acquisition on an enterprise value of about $5 million, and then have managed to add value to the point where they've sold those businesses 5 and 6 years later for up to $30 million. So
that's a great story.
Yeah, it's certainly doable because they bring, mid-market businesses bring a whole lot of skills and capital and knowledge that business with an enterprise value of $5 million just doesn't have. It's there to be grown, but often, they don't have the skills or capital to do the growth piece themselves.
Yeah, the interesting thing from my perspective, I mean, as lawyers, obviously, we sit here at the table and we look at the risk in the transaction and investigate the opportunities within the business from a legal perspective, obviously, and in getting the deal across the line. But what we're not closely aligned to is the discussions years down the track of the achievement of the acquisition in terms of the goals that the acquirers had pre-acquisition. And it interests me, I love this space. That's why we're in this space. But I think it's really important for everyone on our side of the transaction, which is assisting in the transaction getting through, up to completion, to understand what points to success as well, because there's a lot of discussion around in the market about the general failure rate, and failure sometimes is too harsh a term, I think, but the inability of an acquirer to make the most out of the acquisition. And it's interesting. I think it always serves our clients well if we can keep our mind clearly on what it is that makes a successful acquisition years down the track, so that we can help point our clients in that direction, right from the beginning.
Yeah, well, I think that comes back to picking the right business at the start. If you start with the end in mind, you're probably likely to be more successful. So again, determining the mandate and also having a clear strategy or idea of where you want the business to go, and will that business do that? We bought a business a number of years ago with a client in facilities maintenance, and it was quite a small business, and he had come out of corporate and he'd had a plan to retire. He's had a plan to retire in about 5 years. So he was looking for something that he could grow within the 5 years and then pick up perhaps some extra capital at the end of the day for retirement. Now, the business was quite small. It was 2 owner-operators that were working at the coalface, I guess. Because of his corporate experience, he was actually able to look at the business and go, I can add value through technology. He didn't want to work in the business on a day-to-day basis, but he'd had the skills to manage teams of 120 previously, and he had capital. So he managed to grow that business, and he's now, interesting enough, on the market at the moment again, and well advanced as I understand. He's a 6-fold profit on his original investment. So because I think he was able to see that he could add value to it, and it wasn't outside of his skill set. And I think that's really, really important. As they start with the end in mind, you're probably well on the way.
I really believe that maybe this is where the issues come from. In many instances, when the acquisitions, perhaps not as much of a success as was hoped, is the failure of that proper advanced planning piece. I mean, I'm always talking about this to businesses that are selling, the importance of advanced planning before you hit the market, to ready yourself for sale and understand the tax impacts and all of those sorts of things that still aren't done very well by businesses in the most part prior to sale. But I think it's exactly the same for buyers. It's that pre-work, getting themselves ready so that they understand exactly what they're looking for, why, how it fits in and how it will flow through. That maybe is the missing element from many successful transactions. Is that your thoughts as well?
Yeah, absolutely. Yeah, I think we're mad planners. We like our clients to be planners as well. But just to your point around sellers being organised, there's absolutely no question. If they can put in place some operating manuals and some procedures that make them redundant to the business going forward, that's really compelling for a buyer. Having an accountant engaged early in the process where they can start to tidy up the account, so that during due diligence for a buyer, they'll be accurate. So that idea of preparation for both sides, really, the lawyer and accountant for the seller, if they're engaged in the process early, sometimes, a year out, I think they're going to create value for themselves and for the buyer.
I absolutely agree. And look, this is one of the things that causes me anxiety in many instances, because we quite often get clients referred to us in at the point where the commercial terms have been agreed already. And then we come in and we see how much opportunity there was for a quick cleanup beforehand, but it's too late by then, or from the buyer perspective, we can see that, maybe there's some fundamental underlying issues that relate to a lack of planning. But once again, it's too late because the commercial terms are there, the emotion is there as well. And, no one wants to slow it down at that point. Well, I mean, the people who are involved, certainly the corporate advisors don't really want to slow it down at that point either, right? So it's just a source of frustration for me because I just feel like there's so much more we can do for an amazing outcome if we're engaged in the process earlier.
Absolutely, Joanna. It's one of those, and I get the frustration as well. It's one of those things where if you look at the life cycle of a business, a lot of businesses come on the market when they're slightly in decline and have done themselves an injustice. Had they have gotten themselves prepared earlier, they're going to maximise the value of their business. And this is it. The sellers only get to do this once often. This is their retirement plan. And also from the buyer's point of view, it's scary when you look at something that's fundamentally sound, but there is a bit of a decline in the revenue, a bit of a decline, not because the business is not sound. The owners have just taken their foot off the gas a little bit. Had they have engaged with their accountant earlier, I think probably get a different outcome.
I know that, what, Phillip, that happens so often. And then, my other big beef is going into a sale, just not understanding the right structure to sell it and then it making a massive difference in tax at the end of the day,
Exactly. That's why I'm saying it's a team event. There's no question. No one member of the team has all the skills or knowledge, but as a team, you can certainly, structure's important, planning's important, valuation's really important, all those things.
Okay, great. All right. We've talked about the high net worth. We've talked about SME mid-market a bit. I just want to quickly touch on the corporate because you mentioned in passing that this is another sort of pool of clients that you work with. So what's hot at the moment I guess when you're talking about corporates, you're talking about corporates in an aggregation mode. Is that the type of client that comes to you in that size client? Okay. So what's hot at the moment? Who's looking to roll up? Because we've seen lots of industries go through these phases. So I'm interested in your thoughts of what you're seeing right at the moment and maybe future trends.
Yeah. Well, I think as always, annuity style businesses or income always popular. Seen a lot of accounting practices being rolled up by aggregators for a whole lot of reasons, not least to financial planners and also other accounting practices looking to grow through acquisition as well. So that's always a strong marketplace for us.
And from what I can see, that's still hot at the moment. That's still going.
Yeah, exactly. And, a lot of accounting practices are now looking beyond just compliance. They're looking to buy service-related businesses so they can add value to their own client base. So, and the revenues tend to be sticky in that space. And I guess another area of interest is strata management, always popular for aggregators. Those service-related businesses that are under contract can give you that annuity-style income as well. Another trend I think is coming, which is facilities maintenance, that is services provided to high-rise buildings. Enormous opportunity for growth in those soft services to those businesses, whether it's concierge or cleaning or security or fire protection. So aggregators are looking in that space as well now. That's a market that didn't exist 10 years ago, but now we've got all these fabulous high-rise buildings around, and so that's created an opportunity within that space as well. So I guess that's our top three at the moment, just in terms of aggregators. We've always got clients corporates who are looking to grow, as I say, through acquisition, but in terms of aggregation, there's also the other buyer out there now, which is, inverted commas, private equity. There's a whole lot of different models within that, but, they're looking to add value to a portfolio of businesses, not necessarily in the same space, but, they'll bring those management skills and capital again, and, they'll look at businesses that have some synergistic, whether it's through warehousing or transportation or something like that. They'll find something in that space as well.
One thing that I would like to briefly touch on is the sorts of problems and road humps you see along the way in the buying process. And I say this because my perspective is many transactions have road bumps, and it's just a reality. And I think the important thing for us as advisors is to be aware of in advance, obviously, but help our clients move through them quickly without getting too emotionally connected to what's going on. But from your perspective, what are the road bumps that you see most often appear?
I guess in terms of the client themselves. Choosing a business for emotional reasons would be one. Perhaps insufficient assessment of the time and effort required to run the business and the impact on their family and social life. And also an inadequate assessment of the future factors that might impact on the business and the ongoing value of the business. And also, I guess one of the other main things is the inexperience in negotiating the right terms and conditions for the acquisition. And that's where the lawyer and accountant and people like us are pretty handy at doing that stuff.
That's absolutely for sure. I think that's a really good summary of the road bumps. Certainly, I think it summarises a lot of what we see as issues coming in from the buy side. There's certainly a whole heap more from the sell side as well. But
Exactly.
And many of our listeners are accountants or other advisors to businesses. And just thought it might be useful for us to throw in a few pointers at the end as to what they should be looking out for in terms of when growth by acquisition might be a good strategy for their clients, or how they identify that through the work that they're doing with their clients.
Yeah, look, I think compliance-based accountants, they say organic growth's tough. And so what you'll find is these businesses that sort of sit at a certain level of revenue or profit, and they can sit there for some time. So they build up a terrific balance sheet of cash, but they need growth. And so often the help of their accountant, if they can advise them to perhaps look at opportunities around growth through the acquisition of the business, I think that's a real value add for the client. And also I think within that, I think accountants, if they can continually value their clients' businesses as well. And I think that often gives you an indication or gives their client an indication of where they are in their life cycle. You know, if they're going to retire in, 5 years, they need to know what the value of their enterprise is today. If it's not what it needs to be for retirement, well, then they can think about a strategy to get them to that next level, and often that's through the acquisition of the business.
It's interesting, isn't it? Because it seems so obvious when you say it, and I do have this discussion many times as well, but it is one of those things that really requires, I guess, a process in place to trigger in the process of an accountant asking these questions. But I just think they're such useful and valuable insights that as an advisor you can be providing your clients with. So, whilst it's obvious, I don't think it's done enough, and I think it should be, and it's a big value add.
Oh, absolutely. I mean, most of our clients come through accountants, and so they're proactive. They're actually looking for their client for opportunities, and I think it's a terrific value add. I mean, compliance is critical and absolutely important, but that services side of thinking about the end game for the client is also important, I think, and determining where they are today and where they need to be for retirement. And so I think that's really a great value add if accountants and advisors can do that for their clients.
Yeah, absolutely. Okay, well, Phillip, I just want to say a very big thank you for all of your time today. If any of our listeners are interested in getting in contact with you, how do they do that?
Thanks for your time too, Joanna.
My absolute pleasure. I've loved this, Phillip.
I guess you can find us at businessbuying.com.au.
Great, businessbuying.com.au. And if you are running along on the beach, lucky you while you're listening to this, but don't worry, you don't have to stop your run and write that down. We will pop this in the show notes. So head over to our show note on your podcast player or at www.thedealroompodcast.com, where you'll find a link straight through to Phillip at businessbuying.com.au. Okay, fabulous. Well, thanks again, Phillip. It's been a pleasure to have you on board.
Thank you.
Well, that's it for our two-part series with Phillip Teudt from Business Buying Services. Just as a quick recap, in this episode, part 2, we looked in more details at SMEs and mid-market businesses acquiring businesses as part of their growth strategy. So we talk about why they might want to use it as part of a growth strategy, where in their business life cycle this might become most relevant, what accountants should be looking out for in terms of signs of when growth by acquisition is a good strategy, and how they can make the deal successful in the long term. We also looked at corporates buying businesses as part of an aggregation model, and we talked a little bit about current hotspots in aggregation at the moment and a little bit about future trends. So I hope you found that whole discussion very interesting and useful for wherever you are in your business or wherever you sit as an advisor to businesses. Of course, if you'd like more information about this topic, then head over to our website at www.thedealroompodcast.com dealroom.com, where you'll be able to find details of how to contact Phillip directly. Finally, if you enjoyed what you heard today, I'd absolutely love it if you could maybe take a few seconds out and leave us a review on iTunes or your favourite podcast player. And don't forget to hit subscribe if you haven't subscribed already. Well, that's it. Thanks again for listening in. You've been listening to Joanna Oakey and the Deal Room podcast. See you next time. Aspect Legal has a number of great services that help businesses prepare for a sale or acquisition, to help them prepare in advance and to get transaction ready. We've also got a range of services to help guide businesses through the sale and acquisitions process. We work with clients both big and small and have different types of services depending on size and complexity. We provide a free consultation to discuss your proposed sale or acquisition, so see our show notes on how to book a time to speak with us, or head over to our website at aspectlegal.com.au.
Ladies and gentlemen.
That will conclude this evening's entertainment.
Thanks for listening to the Deal Room podcast. To find out more about this episode and other episodes in the series, check out the show notes or head over to our website at thedealroompodcast.com.au.